Thanks, everybody. Thanks a lot for joining today's panel on evolution of lending. This is Pankaj Gupta from EthAum Venture Partners. EthAum is a deep tech accelerator and fund based out of Singapore. We have approximately 90 startups in a portfolio from different parts of the world, different stages, serving to Fortune 1000 customers in different geographies and different sectors. Today, we have P2West with us, and we have Austin and Samuel, founders of P2West. P2West is one of the portfolio startups that we onboarded in January 2023, and they are focused on providing peer-to-peer and SME lending in Nigeria. They are also coming up with insurance aggregation platform, which is going to be launched pretty soon. Today, we have fantastic panelists from different parts of the world with diverse experience, and I'm sure that we are going to have a fabulous time interacting with the panelists, getting their insights on how the industry is evolving, what kind of innovations are impacting the industry, and so on and so forth. Now, I would request Austin to give a very brief overview of P2West, probably 1 minute. Austin, please go ahead.
Yes, thank you very much, Pankaj. Good afternoon, everyone. It's exciting to have you all here. And I'm very glad that we have some exciting discussion. P2West started in 2020 after I left my banking career, and we started to provide peer-to-peer platform. We're actually a technology company developing peer-to-peer platforms, and we started to develop a product that is focused on peer-to-peer lending. We've seen a lot of gaps in Nigeria and across Africa generally in terms of lending, where there are just less than 1% of Nigerians that have access to credit. And we are looking at how we can use technology to solve this. And this is what we've been doing in the last 2 years. We already have close to 200,000 customers, and we are seeing how looking at how we can scale. Thank you again. I believe we're going to have very interesting conversations.
Thanks a lot, Austin. Now I would request our panelists to do a brief intro of themselves. So shall I start with Sawan?
Yeah, sure. Hi, everyone. Good evening. Thank you, Pankaj, for having me on the panel. It's a great opportunity to connect with everyone and speak about the landscape. Just give you a bit of background about myself. I have a career in banking, investment banking, retail consumer banking, mainly within financial services and insurance. I've had the privilege of investing in some really exciting startups by leading 3 corporate venture capital firms. I focus mainly on fintech, or the overarching fintech, focusing on payments, lending, price comparison websites, and insurance aggregators, as well as direct-to-consumer distribution models. In the past, I've invested in data wrangling softwares and automation tools, and I'm truly excited to be on this panel.
Fantastic. Thanks a lot, Sawan. Appreciate it. Smita?
Hi, thanks Pankaj for having me on this panel, and just a little bit brief about my background. So about 14 years experience in financial services, about 12 years in India working with various banks and finance companies. Over the last 2 years, I've moved to the Middle East. So been working here with a bunch of fintechs in this space. And right now I head partnerships at a B2B trade finance platform called Lamma. And excited to learn more on this panel from the esteemed panelists and the team.
Thanks a lot, Smita. Appreciate it. Adedeji?
Thanks so much for inviting me, Pankaj and Austin. My background, 16 years in banking across some of the largest Pan-African banks, across finance and technology and digital payments as well. Then spent maybe like 4 years as well as a corporate VC. And currently I run LendSquare. LendSquare is a lending as a service platform. We're taking out the pain of what it takes for you to launch your digital lending. Instead of spending maybe $500,000, $300,000, you will do that with 10% of that and launch in weeks instead of months or years. We're quite excited about credit in Africa because it's almost like a desert. The opportunities for growth in credit, just for the business and even for the Africans themselves, is almost infinite. So happy to be here with everybody. Thank you.
Fantastic, Adedeji. Appreciate it. Ankita.
Yeah, firstly, thanks, Pankaj and team for having me on board. Just to share a bit about my experience, I've experience across data analytics and digital product management and strategy. I started with life sciences in US for close to 7 years. And with my data and product experience, I joined the financial services industry in India. And I've been here for almost close to 6+ years now. I look after the product initiatives at CreditSights in India. CreditSights in India is a wholly owned subsidiary of CreditSights in Japan. We received our NBFC license somewhere around in 2019 in India. And from that time onwards, we've been a fast growing new conglomerate with our clear verticals across wholesale lending, co-lending, co-origination, direct to lending in SME space, and also consumer. I currently take after and look after the entire initiatives of building a debt-focused marketplace. And the aim is to enable the fast and secure way of asset deployment by the financial institutions in India. And our aim is to kind of bring a digital marketplace to enable the deployment of a faster and more secure way of deployment of capital across different lending asset classes. So looking forward to the session today and learning from the experts here.
Fantastic. Thanks a lot, Ankita. We have our panel from 4 different geographies, Africa, and my laptop is not working well. Africa, India, Dubai, and UK. Now it's time for Austin to ask some really interesting questions that he got in his pocket. Austin, please take it from here. Please unmute yourself, Austin.
Sorry. Hello?
Yeah, go ahead.
Okay, so I'm starting with Foster, and I'd like to ask, what are the most painful challenges that lending leaders are concerned about?
So if I see it right, I think Foster could not join. Do we have Foster?
Oh, sorry. Okay. Okay,
Foster
sorry.
could not join.
Will someone be able to take that for us? Someone, please. What are the most painful challenges? What are the most painful challenges that lending leaders are concerned about?
It's a very interesting topic of discussion in this current climate. Sorry, was that for me, Ankita?
Go ahead, Sam. Yeah.
Okay.
No, go ahead, Sam. Yeah.
Okay. So given, what's happened in the last few weeks and even, a couple of years ago, I think you really have to dissect lending. So what are you looking at? What is the focus of the business? So when I look at the lending ecosystem, the challenges for the sub-verticals are going to be very, very different, i.e. the nuances when I'm taking out residential mortgages or asset-backed securities or something that's collateralized. As a lending leader or as a lending institution, I'll be focused on something different. And if you look at the unsecured consumer lending market, that's going to be a different ballgame completely. And then you go into the commercial, project finance, M&A, leverage buyouts, management buyouts, then the challenges are different. But I think the 3 key general or generic themes for lending leaders is going to be the net interest margin, i.e. the NIM, which has been the main focus of bread and butter for consumer banking. And given the recent rate rises across the globe, customers and corporates are becoming more savvy. They're becoming more financial literate. So they are no longer parking their cash or savings into a traditional customer account or a current account. And they are seeing that the banks are actually lending this across into money market funds, and they're making 5%. So people are becoming more savvy. I think that's a big challenge at the minute, where a lot of savers essentially will take money out and put it directly into ETFs and mutual funds to get a bit of risk-free yield. I think the second challenge for a lending leader would be the risk premium. How do you actually calculate the risk premium on the credit risk when you're lending to consumer versus an asset-backed security? So how do you price that correctly? And then the third and key, most important one is the NPL provisions that the lenders need to make when they're lending the portfolio out or lending money out to the borrowers. So those are the three general challenges that will keep me up at night, essentially.
Fantastic. I think,
Thank
Ankita, you wanted to add a point, please.
Yeah.
Yeah, sure. Thanks. Being a person coming from data, how I've actually always evaluated lending space, and that's how I find the Indian lending space quite interesting. And sometimes when you draw parallels with what is happening in Indonesia, for example, in P2P, it's quite familiar and actually it anchors to sometimes the availability of the right data. So what I see is like as there are more and more consumer demands in the market, not just from the consumer point of view, but also SME segment in India itself, the availability of the right set of data to be able to draw the insights and make your loan processes, which are usually quite clunky in lending, right? They can be very heavy paper-driven products that you have to launch. How you can actually make all these processes much more seamless and faster through maybe new data rails, which are actually enabled by the digitization of things, the data the consolidation, the right set of documentation, which kind of reduces the number of iterations that are enabling you to underwrite someone faster. And at the same time, if you have those right data set of rails to be able to reach those customers which you are not able to reach at the moment. So the huge segment underserved market, which is actually either new to credit or, for instance, they have been actually running books, but you don't have the right data points on them to underwrite them the way people can actually underwrite me quite easily or you quite easily, is one of the painful challenges that the lending people are actually trying to solve, specifically in segments which are growing, for example, priority sector lending or consumer lending. If you have to launch like new products, for example, if you want to just quickly launch a supply chain product, how do you have the access to the right set of transaction so that you can actually take those decisions quite fast, is something that is actually kind of evolving, and it is actually really growing at a very fast pace with the fintech innovations which is actually coming up. And also the availability of the credit to the customer in right time, because with the Q-commerce and the e-commerce coming in, people are used to getting things faster. And loan being a kind of product that people usually, what I've at least noticed is that it's not a product that someone kind of longs for, that I want this kind of a loan. They actually long for something which is an outcome of the money that they get. So how people are actually kind of able to embed the lending products within the customer journey. For example, if I'm going for a vacation, is something that I'm longing for in the morning, but I'm not going to be definitely longing for taking a loan for that. So how do I kind of embed as a lender in the existing fast-paced customer journeys, which are available through other fintechs as well, is something that lenders are actually really looking to solve for.
Thank you so much. Thank you so much for that insight, Antika. Just to go deeper into that, you did mention about data, a set of data available, consumer demands. Can we look at if you can expatiate on how important is the role of AI, ML, or blockchain, or data science? What importance will this play in the disruption of lending space as it is today?
Sorry, you want
Did I-
digital lead?
Sorry, is that clear, Antika?
Yeah, okay, this is for me. Okay, all right.
Yeah, I wanted you to just continue. This is because you did mention data accessibility, and I'm just thinking you can talk more on the role of AI, ML, and also data analytics and data science. How important is this going to be in disrupting this space?
Yeah, see, I'll start with the data science part of it, because that is something that I see a lot of fintechs are actually taking advantage of. Of course, I'll briefly touch upon on the AI/ML, and there must be other experts who can touch upon that as well. How that is actually enabling some of these customer journeys for personalization of the customer profiles to be faster. But if we actually just focus on the data science part of it, there are multiple data sources which are available to be able to assess a particular person. Some of this can be very structured traditional credit data, and some of it is actually alternate data sources, which fintechs and now these lenders, the legacy lenders have actually also started partnering with fintechs to be able to have access to this. How, for example, digital lending platforms, I would not name anyone, but for example, they are using data sciences to personalize the lending offerings to the customer. So for example, as I mentioned, if I'm actually looking for a particular thing to be bought out, if I have the data point on like how many purchases that you have been doing over last couple of days for a repeat purchase, I can actually personalize a product for you. At the same time, I can actually enable different alternate data sources, for example, which could be beyond the bureau data, which is actually reported at your level, which could be your mobile data, your social data. At some point, there was some fintech who was actually using the LinkedIn data of people to be able to underwrite what education institute you have actually worked and you have actually going to be joining as a new professional. So all these creative and alternate credit scoring models, which can be built over the top of alternate data with the help of data science, is something that the lenders are really banking upon, and it also helps them further increase and improve their risk management, which is eventually it ties up to the previous point that we were talking about, that how do you risk mitigate on in which customer segment you are actually deploying how much capital, essentially, right? So that's the whole role of data science, I would say. In terms of AI and ML, I see a lot of fintechs actually coming in and actually automating some of the offerings which are offered to the customer, how the faster response times can be actually streamlined. Because again, lending is like, you have like a bottom line, which is like ops heavy in lending. The moment you actually grow your book, the bottom line actually increases and your ops cost increases. So how you can actually leverage some of these automations coming with the help of AI ML to reduce and automate some of the customer journey and touch points as well.
Thank you very much, Ankita. DG, I just want you to come in here. We've discussed the issue of data, access to data to make lending decisions. This has been a major issue around here in Nigeria and across Africa. I don't know if you want to make some point around this subjects, DG.
Yeah, thanks so much, Justin. So as you know, data is a foundation for credit everywhere in the world. But if you are, let's say, in Singapore, if you are in the US, or if you are in Europe, you probably have credit history. But then it's a chicken and egg game. In Africa and Nigeria, for example, if you don't have access to credit, you don't have a credit history. But if you don't have credit history, then you don't get access to credit, which becomes a problem. And then you've seen the rise of data lending. People like P2Vest, for example, you start leveraging on alternative data. And this data could be both financial, behavioral, telemetry to make a decision. So, and I think it's already well established, even beyond the fact that maybe engineers and software developers do this in the field. It's also well established that you could use alternative data as process to make a decision for credit. And so while that is established, I think the only challenge we have in Africa, especially Nigeria, is just having access to data and having access to quality data and having access to quality data at an affordable cost is where the challenge is right now. So if you do consumer credit and then you need to lend a scale, it's always going to be a challenge if the cost of data is too expensive because it eats into your profitability.
Thank you very much, DG. I appreciate it. Smera, I'd like to take you on the next question. How do you see this space evolving in the next 5 to 10 years?
Yeah, so from my perspective, I think embedded finance, I think we alluded to that from some of the panelists. I think that is the future of fintech and the future of finance, where essentially anybody can be a lender, right? Your grocery store where you go and purchase your, your day-to-day commodities, they can be a lender. Anybody essentially is a lender. So I think that's the solution also which we at Llama are trying to have. We have a lending as a service sort of solution where essentially anybody who can access our platform can be a lender. So I think this is potentially the future of finance, wherein you see embedded finance in the B2B segment as well. On the B2C segment, you see it very often, right? There's so many BNPL players, you have credit cards, you have all of that going on. But in the B2B space is actually where the challenge is, right? Because doing that rapid credit scoring, alternate data, all of that is very difficult in the SME space. So I think this is probably the future wherein we see it across all segments, and especially in the B2B space on the SME side, which is a key under-tapped market from my perspective.
Thank you very much, Smera. I don't know if someone will want to make some points on that subject, looking at innovation and the new solutions that are happening in this space. How is this going to evolve in 5 to 10 years' time?
Yeah, I can take that as well. So from a innovation perspective, I think Ankita and Samira really touched up on it. I'm a big fan of banking as a service platforms and lending as a service platforms, and the open banking initiatives that are coming out across the globe and even in Africa. So that is a game changer because it allows new entrants to come into the market. It allows new players to get a better understanding of the risk they're taking on. But ultimately, it depends on the transactional data, the data mining tools that the solutions like Llama have. So how do you structure that data, enable that risk taker, essentially the lender, to get the insight on who they're lending to and what they're lending for, and get that, I guess, risk premium attached to it. I think, one of the other questions that you touched up on, Austin, was on blockchain and smart contracts. So they definitely have a place to, in the ecosystem, but that's always going to be operational efficiency and real-time and dynamic data for either the front office staff or the back office staff, right? So how do you close out a loan? How do you open a loan? And these things can be very dynamic. So it could lead to that customer-facing efficiency where they have real-time insight, and then even back office operations. The evolution is going to differ country by country and geography by geography. And it all depends on the regulator, the whole ecosystem. How do you encourage that digital maturity to really leapfrog, not just catch up? So that's my 2 cents on it. I think, Africa is an exciting place. P2P has been in Africa for a long time, from those informal saving groups to now a bit more formalized. So yeah, it's a great opportunity for P2P.
And just want to mention over here, Foster just arrived on the call. Foster, could you please do a brief intro of yourself and probably want to take one of these questions?
All right, thank you very much. Sincere apologies, I had a few technical glitches, but I'm glad I'm still here. Better late to join the conversation than never. So my name is Foster Akugri. I live and work in Ghana. I support innovation at Old Mutual, one of the leading insurance groups in Africa. Our parent company, which originates from South Africa, is an assets management, financial services and insurance business. Also has a property and banking business as well. I joined the organization to look after new business models within the insurance, insurtech, financial services space, as well as drive innovation partnership within the business. So I'm excited to be here. Previously, I used to work for Standard Bank, where I was heading youth banking and their innovation center in Ghana. So yeah.
So Foster, before you came, we were talking about how the space is evolving or going to evolve in the next 5 to 10 years. So I don't know if you have any thoughts on that.
I'm not sure what has been said, so I don't duplicate the conversation, but I think the last bit I was listening to was around credits and what credit means. And I think Adediji had hit on a very, very important fact around what credit systems mean in Africa. Unfortunately, unlike certain parts of the world where once you start your journey, you build a credit history. Unfortunately, here you have to have had credits to be able to build credit history. And how do you get, what kind of data sets or what kind of credit systems we have to explore to be able to do that for you. And that tells you how small a bracket of people can have access to credit, right? And this has spiraled into several other areas around raising capital for new ventures in Africa, being able to do proper due diligence on people to know whether or not this person is worth lending to, and mitigating your risk in the process of doing that. So we are still very, very behind when it comes to maturity of the banking space and credit facilities. The other thing is around the regulators' proactiveness in terms of the speed of innovation, right? Yesterday, I was on a panel discussion as well, and one of the key things that came up was surrounding the issue around regulators supporting innovation or prohibiting the speed of innovation. And as we can tell clearly, innovation is heavily driven by consumer insights. The need to innovate is determined by the consumer. And that forces the financial institution, which is more closer to the consumer, to start to think about solutions to solve those problems. However, the regulator, who is supposed to protect that industry, which is the financial services space, has to be enabled to do its monitoring and regulatory exercises very well to protect the depositor at the end of the day. So in as much as there's appetite for the customer's behavior to change and the need for the bank to evolve to meet the customer needs, there's also the challenge with the regulator to also move at that same speed to protect the depositors in the process. I don't know if you are going to be talking about regulations, so maybe I'll pause here, and if that is a subtopic that will come up, we can discuss that further.
Thank you for start. So it's nice you're coming on at this time, and thanks for the points you've made, but I'll still take you on a little bit more since you're talking about your role on innovation, and you can hardly talk about innovation without talking about disruption. And before you came on, we were talking about what are the kind of technology or the kind of ideas that are going to cause disruption in the space of lending. We've looked at AI, ML as one of those type of technology or innovation that you may call it, blockchain, data science. How do you see any of these playing a major role in terms of disrupting the lending space?
So imagine, so there's I don't know if it is new on this side, but something called predictive lending, right? Where based on the history or the transactional behavior of the customer, you are able to pre-approve a certain limit for the customer and tell the customer, hey, you're eligible for this amount. Click OK, and then straight away, a loan contract has been approved and the funds has been disbursed into your account. We are reaching a point where instant access to credit is going to become a very, very competitive strategy for financial services organizations to lead in the market. And to be able to do that is being able to lead innovation around leveraging AI. First of all, cleaning and structuring your data right to be able to give you the necessary insights you need, and riding on the back of that to create an automated credit predictive model that allows you to be able to lend quickly to customers or preempt their needs before they even come to you. And that becomes a proactive financial service solution, right? However, there are limitations to this and there are risks to this as well. And that includes the sources of data and how much privacy is the customer going to have. Because today, when you look at micro lending through mobile money in Ghana, we have MTN leading the market in mobile money and has a number of lending solutions on its platform, YellowSave, Quick Loans, Express Loans, powered by Jumo and Letshego and a few other banks, right? And they use a different type of data sets. So they are checking how much airtime you are buying, how much internet and data you are consuming, I'm sure there are other data sets they are using we are not even aware about in terms of our cash, our digital footprints, and other forms of information, right? Because we are still getting to the point where we have a unified credit bureau system that can allow for financial institutions to know that you have facilities in other organizations. And that's already a high risk and exposure to financial institutions on this side. There are several other African countries that are either far behind us or on the same level as we are, or even ahead of us. And I think Nigeria has led the markets in a lot of these things. They just launched the open banking guidelines led by Adedeji himself. I think he deserves a round of applause for his efforts and his team. The first in Africa to launch an open banking guideline. And the UK has already been benefiting from this already. You can imagine the enormous opportunity that presents to fintechs, right? To, for the first time, be able to provide very unique and innovative solutions, leveraging data sets from financial institutions or traditional banks that already exist. And for me, I think it will solve financial inclusion to a very large extent. There are over 200 million people in Nigeria, but still a significant portion of them are unbanked. And this is going to definitely disrupt reaching last mile to providing financial services for people.
Thank you. Thank you very much, Foster. You've touched on some other important topics that I would like us to discuss. You mentioned open banking, you've mentioned privacy, and I'm going to ask Deji to speak on these two items. But before that, I want to ask Smaira if you can talk about privacy. So when talking about privacy, it cut across, I believe there's a different experience or different kind of issues around consumer privacy when it comes to digital lending in India and some other climes. And then the experience we are having right here in Africa is also different. And I'd like Deji to touch on that. So if you may just give us some points on what is going on and what is the impact of digitalization on also digital lending when it comes to privacy of customer data.
Yeah, 100%. I think data privacy is always a cause of concern, right? So one has to be very clear and clever with how one uses this data, right? Primary concern of the regulators is that any processing of the data is actually done within the country and it actually doesn't leave the country. So I think this is a key challenge to actually scale up in, the Middle East and maybe even Africa potentially, if that is a regulatory challenge there, because one needs to invest in data centers for the data processing within each new country that you kind of expand into. So I think this is one of the key challenges which, fintechs or alternate lenders really have in terms of scaling up in certain geographies. I think another thing which, one of the fintechs that I was working in actually did to help circumvent this data. I think Foster was talking a little bit about pre-approval. So in that sense, when we used to work with a partner data for pre-approval, we would actually get anonymized data, right? So you just get the particular metrics and kind of get anonymized data. Then you'd ask the partner to actually send across like a, notification or something like that saying that, hey, you've been pre-approved for this amount, and then try and get the consent there for it to go to further processing. So I think these were innovative ways which we kind of worked around some of these challenges, because ultimately you need the consent of the particular party for you to, go ahead and market them a loan, and they need to opt in for such communication. So I think data privacy is key. And one also doesn't want to get, too annoyed and bombarded by communication if you don't really want it. So I think all of us face that as consumers. You want to block certain messages, and, ultimately, if you're trying to sell loans and shill loans, you don't want, to get blocked. So I think it's super important to be conscious of privacy.
Thank you very much, Smaira. So I'm going to bring on Deji now. Deji, so we're going to look at two important items that we're going to discuss now. One is the issue of data privacy. I would like you to touch on that and our experience and some of the steps that have been taken, the regulatory steps that have been taken in recent time in Nigeria, and also what is happening from FCPCs and also Google and the rest of them. And also look at the impact of open banking, how is it going to play in the lending space? Thank you.
Thanks so much, Justin. So the interesting thing about lending is that you literally have to give up a lot of data about yourself before you have a credit. And so ultimately lending is almost similar to health. Your doctors knows everything about you. Your lender knows everything about you, especially and most important things you don't want people to know. So it's especially important that lenders operate at a certain level of privacy compliance. Unfortunately, especially in Africa, you notice that in Nigeria, in Kenya, you've seen a lot of lenders kind of abuse this privacy, especially when the borrower is making good on his loan as quickly as possible. Now, this has become extremely challenging. So the industry has been kind of pushing against this. Now, here's the thing. Even though in Nigeria we have like over 200 digital lenders, the few lenders causing this abuse, the 10%, the impact of what they've done has been so severe and corrosive and toxic that it's kind of instigated governments across different jurisdictions to create significantly very tough rules. So you mentioned FCCPC in Nigeria, which now put pressure on Google and the Apple to ensure that every digital lending app, unless you're a bank, has to go through some certain level of NDPR, that's their data privacy compliance and checklist before they are put on the store. Now, that's created a lot of friction for everybody. And the need for data privacy, no matter how much you are being owed, I think is sacrosanct. We should never expose the data of our customers, who are owing money. But this always a challenge. And while I'm not supporting and we're totally against people misusing data, but we also need to understand that some of these problems coming from the fact that when lenders want to make loans, they don't have access to good data. So in the end, the person that is owing maybe P2V's money, if his name is Credit Bureau, that will have solved the problem of not even giving them data. That will have allow them to do something unethical to go with. I think the areas of data privacy will always continue to evolve. We think it's going to get to a level where everybody will start operating at a certain level of maturity and compliance that maybe in a couple of years, this problem will go away. But then, as we move into the era of open banking, what does open banking do? Open banking is practically made for lending, because what it does is that it allows borrowers, it allows account holders to grant access to their bank account, bank information, do transactions on their account to third parties. So if you are a digital lending app, for example, and I want to borrow money, I will grant access to the lending app to look at my bank account, look at my transactions, true transaction on falsified data, and make a decision. I feel like that improves the quality of lending, because the quality of data is better, data will be cheaper, it will be faster, and it will be pervasive. So open banking will be extremely traditional for lending in Nigeria. And I feel like as Nigeria does open banking well, we see other African countries going through that path as well. We're talking about where Costa is leading innovation. So he would lead that in Kenya, in Ghana. Well, you see that happening in Kenya, you see that happening in Rwanda. Probably in the next 5 years, open banking will probably standardize across every country in Africa, probably every country in the world. And I feel like lending will change significantly for better between now and that time.
Thank you so much, Deji. Thank you so much on the insights around open banking and also the privacy. Very clearly, these are issues and these are, principles and guidelines that will definitely impact on how lending is done, in the future, especially as we see it now in Nigeria. The open banking and access to good data will help digital lenders to make better decisions and also be able to offer more quality credits to people. So I'd like to go to Antika. Sorry, Sawan. I'd like to take you on this question. What could be the biggest hurdles in the adoption of solutions within this space? What could be the biggest hurdle?
I think coming from a banking perspective, my biggest hurdle has always been a regulator, right? So, I mean, that is essentially what you need to address first. But to be honest, I think what you need from data privacy perspective, from lending protocols, or even adoption of smart contracts or blockchain, you need the whole ecosystem on the same page and not play pork barrel politics, right? So they need to kind of concentrate on the end customer. What is the benefit that the end customer gets? They can borrow cheaper, they can borrow faster, but more importantly, the credit risk profile needs to be adequate, right? And they need to be educated as to what they're borrowing for, what privacy data they're giving to the lender so they can get their model right. I think the biggest hurdle in one word will be in one sentence will be the lack of standardization across the regulators in Africa and globally.
Very much. So you said the biggest hurdle will be the lack of standardization across Africa and possibly the whole world. That is a very important one. Antika, do you have something else around this? What would be the biggest hurdle in adoption of innovative solutions?
Yeah, absolutely. In addition to what Savan mentioned, which are actually the critical points for any regulated entity, and even in India, even if you are just a fintech, you have to be quite aware about how your product solution is tied around the regulatory space, because you may have actually ended up launching a solution, but within months' time, the moment the regulatory kind of decisions kind of go and prohibit to use that particular solution or tie up with any financial institution, it kind of stops your story from 0 to 1 as a fintech. But apart from that, what I've seen, and I believe is like current era where people are actually trying to get into the creation of lending products and co-origination of lending products, where the first party taking ownership of like the entire consumer journey and the second party actually participating as a capital deployment, either at a granular level or at a wholesale level. What happens is the legacy systems, sometimes which banks may have, could actually lead to derailing the scale at which the industry can grow. So for example, if you want to kind of collaborate with a fintech who's actually providing a fraud detection solution based on an AI and an ML, the legacy system sometimes of the banks and the infrastructure that they have should be able to kind of support those kind of partnerships, should be able to allow the integration. And at the same time, seconding absolutely the data privacy and the security front in terms of how you actually protect the data from breaches, any kind of cyber attacks is something that people have to really tackle. Otherwise, it will help not enable them to scale basically the solutions.
Thank you very much, Antika. And thanks everyone, all our panelists. Thank you so much for all the contributions you've made. We've learned a lot during this session. We've seen the role of regulators. We've seen the role of innovation across the industry. We've seen how innovation is going to help in disrupting the lending space. We've seen the impact of privacy, open banking, and how data is going to play a major role. Thank you all again for your contributions. Just to close this session, I'd like to just take the final point from each person. What will you say to be our final takeaway from all this conversation that has happened? How we're going to grow lending, how digital is going to play a major role in the lending space, or what should the digital lender be looking at? Just a final word. Starting with someone.
Direct to consumer models.
Pardon?
Direct to consumer models. How do you lend out money directly without the middleman, without the loan shark? How do you get this done?
Thank you very much. Exactly what Peter is trying to do. Thank you so much. Yeah, Foster?
I think it's exciting times yet. before we can even think about lending, we also need to think about educating the customers about credit and what that means to them, because we can't afford another SVD in this era, because it's going to really shake the confidence level in the financial services industry. So I look forward to seeing more and more education around what credit means, the role consumers play in the financial services industry and its sustainability.
Thank you. Smira?
Yeah. Sorry. I think definitely one of the key challenges for innovative business models and getting the right kind of funding and getting the regulators on your page as well is establishing product market fit quickly. So I think this is a key factor for fintechs to innovate and actually show success.
Thank you. Ankita?
Yeah, I feel like how to balance the entire digital tech innovation and the process innovation is something very key in a market like India, where the data sets are disparate, the customer segments are disparate. The balance of managing your digital journey, but at the same time, managing and digitizing your middle and back offices is very essential. So the lenders have to keep like a very strong balance on improving the customer acquisition, experience, retention, backed by the data, of course. But at the same time, keep on digitizing the middle layer, which is actually boosting the dispersal of the loans to the end customer at a faster time as well.
Yeah, and Deji, thank you.
Okay, I see on two things happening. The first is embedded finance. I feel like down the line, credit will become like a fabric of the society where you can get credit just at the moment you need it, in unobstructed form, transparently. I know everybody's doing buy now, pay later now, which is almost showing like the future what credit will be. But I think in the future, it's just going to be everywhere. Then I also feel like down the line, because to be a lender today, you need a lot of technology, very expensive, access to data, that is hard to find, expertise, hard to find. But a lot of these things will become, as technology becomes very pervasive, everybody and anybody can be a lender, which is one of the things you're doing at P2Vest, and also one of the things we're doing at Lender, which is basically make very sophisticated technology become available that it becomes like nothing. That's the kind of future I think ahead of everybody. Thank you.
Yeah, thank you all. Thank you all again to all our panelists, and thanks to all our guests on the call. Pankaj?
Yeah, I just want to make sure that you understand this is not the end of the session. So this is the first half of the session where we had a thought leadership panel, and we were able to get really interesting insights from the banking fintech leaders from different parts of the world. And now in the second part of the session, we have a roast session, right? And I love, this particular piece of the event, roast session, because in this particular session, our panelists are going to roast Austin by asking some really difficult and direct questions on his business called P2Vest. So Austin will do a brief pitch of approximately 5 minutes on what he got, what is the solution, what is the traction, what is the technology, and then I would request our panelists to ask some really brutal questions without any hesitation. Please, Austin, take it from here.
Okay, thank you. Let me just project my screen. Please let me know you can see my screen.
Yep, go in the presentation mode, please. Awesome, go ahead.
Yeah, is that go? All right, so I'm presenting P2Vest, solving Africa consumer credit problem. So just 5 minutes, all right? So we have less than 2% of Africans that have access to credit. Also, less than 50% of African population have access to banking services. About 80% of point of sales merchants have cash flow issues, and less than 3% of African adults have bought any form of insurance. So P2Vest set up to address these problems. We built a hybrid of peer-to-peer and direct lending model where we are able to take consumer data, score them, present to lenders who are able to make decisions. And also P2Vest is partnering with some of the mobile network operators to develop alternative credit lending algorithm that could help in making lending decisions faster. And the point of sales merchants, we're doing some kind of partnership with them and giving them credit line to solve their cash flow issues on our platform. And in terms of insurance, we're also developing partnerships with different insurance companies in Nigeria. We just acquired an insurance aggregator license that allow us to partner insurance companies and distribute their products. And these are the reasons why P2Vest was set up. All right. The business, P2Vest started in 2020 and now 2 years plus. We are focused on working class individuals and SMEs, but for the SMEs for now, we do a lot more business with the point of sales merchants. Our revenue model, commission is number one on our revenue model, and then we have direct lending, and also we have some fees. So we do earn 100% on the revenue we make from direct lending, where we actually lend ourselves, and then we charge 20% commission from lenders that lend on our platform. We earn 1.5% as fees when our platform is provided as a service, and then we earn 5% commission on insurance premium when we provide insurance products on our platform. All right. The market opportunities, we see 160 billion across Africa, $160 billion. And the serviceable addressable market is 80 billion, and then the obtainable market we see as 1.6 billion, and P2Vest is looking at a 5 years estimate to take 2%. Okay, key competitors, as we see, there are many lenders in Nigeria. A few of them are only looking at peer-to-peer, and we look at Fins and Kia as some of the key competitors for us. And then on the insurance side, there is Curacell, and then there is Paddy Cover. But there are key differentiating factors for us in that we are able to take borrowers' information and score them and present to lenders, taking both financial and non-financial data, which some of our competitors are focused mainly on financial data. And then P2Vest also integrate to different partners, fintechs, and so many other players in the financial ecosystem that help us to be able to provide and funnel good leads. And also, we enable our lenders to make decisions on their own, and that is different from some of the platforms or some of our competitors that actually present specific customers to the lender, or more like restrict the lender to certain products on their platform or to certain type of customer. Also, we are licensed. We got a license from the regulator to be able to play in the insurtech industry, and this gives us some edge and competitive advantage compared to our competitors that we see in the industry. Most of them that do not have any form of license, because this is just new. And also, we have partnered about 10 insurance companies right now, and we're still working on more partners for this platform. Okay, the traction, we started in 2020 and we've done some disbursement, and then 2021 we had a revenue of 60K, about 1,000 sign-ups, and right now we have about 220,000 in 2023. For 2022 we had 200, and revenue was $260,000. And we are estimating that we're going to get 1 million sign up in 2023, also $1 million revenue. And we estimate that in 2024, we should be having revenue close at $3.2 million. Signed, we've done some partnership, as did mention. We have partnership with some major merchants on buy now, pay later, and then insurance. We've now got about 10 of the insurance partners, and then we have a major project with a mobile network operator on alternative lending, and we received the insurance aggregator license. All right. These are some of our key partners. We have partners across the banking industry, a number of them, UBS, Sterling, SunTrust, VFD, and then the payments companies. We have Paystack Industry, Sebit, MoneyPoint, and we have other fintechs that play different roles on our platform. We have Verify Me for address verification. We have Mono for statement. We have Periculum for some kind of data monitoring and management. And then Lensquare also, we do some kind of scoring and customer, some kind of data search from Lensquare on customer scoring. And also we have my bank statement also that are integrated to banks to provide us bank statements from different banks. And on the insurance side, we have health insurance, we have Universal, we have Royal, we have Sovereign Insurance, and then a number of other insurance players that we are still integrating. The team led by me is Austin. I have about 20 years experience. 16 of it have been in the banking industry, and my background is around digital and technology. And I also have the COO and co-founder, who is Samuel Abulsuru, with 12 years experience. Also worked in the banking industry and technology space. And I have Go Chukwu Ajalawi is the CTO. And he has 7 years experience and have been part of different fintech solutions. Thank you very much. I'll be ready to take your questions now.
Okay, who want to start the roasting first?
Thanks, Austin. I'm actually curious about your TAM slide. I do see that you have actually mentioned that your customer segments are the direct consumers and the SME. But how is the breakup like in the geography in terms of like the split between, you know, the number of regular retail consumers versus the SME segment? And are you actually seeing a different stream of product that you push from your platform to the SME versus the regular consumer?
Yes. So for SMEs, we have about 10,000 of them on our platform, while the consumers are over 200,000. So that's a wide gap, and it's intentionally so because we are not focused on all type of SMEs. We're just for now dealing with a lot more of the point of sales merchants, because we saw a gap in their type of business. They have cash flow issues that we're trying to address for them. So therefore the offering is different. A lot of the individual and retail customers, our offering to them is more on the nano level, nano lending to micro, where they are taking about $10 to possibly $100, $200, and then they continue to grow their credit history with us, and then we up their the limit for them. So they are in tiers from tier 1, tier 2, tier 3, like that. But then for the SMEs, they can come in at a level and they can borrow as much as, in some cases, as much as $2,000 or even more, based on the volume of business that they do. So the offerings are totally different and the requirements are different on our platform for these two. Thank
And
you.
you have the provision, thanks for that. So do you have the provision for the credit enhancements as well for the consumers?
Sorry, provision for?
Is it a credit line based kind of a product that you offer in which you, once you get the customer, they always retain with you? Or is it like one time they get $10 and then they close the loan and then the new disbursal is done for them?
Yeah. So they come on the platform. They go through they provide the necessary information, give us access to certain data for us to make decision. We make an offer, then they get the loan disbursed to them. When they pay back, we are able to offer them a higher limit, and then they pay back again, we offer them a higher limit. So we keep moving them from tier to tier, and each tier has a different limit, and each tier again has different requirements. That's why on the list of partners, you see we have some of our partners that does address verification KYC for us. So there are KYC requirements from tier to tier, and that also goes along with the limits that the customer gets.
Great. Okay. Yeah. Thanks.
So I had a question. Actually, you mentioned you partnered with one of the mobile network operators, in terms of data sharing. So I was just curious about that, because most of the mobile operators in the African region are into mobile money themselves, right? They're the ones who are into mobile money and lending, etc. So what is the use case for them partnering, and don't you see them as a threat as well?
Okay, so the regulation in Nigeria has made it difficult for mobile operators to play in the lending space. They cannot, all right? And so they just have to partner. The regulator, the central bank made that clear. So the mobile network operators are allowed to set up what is called a payment service bank, but the payment service bank cannot lend. So they can only partner with lenders. And so, but they have this huge data that will help in lending decisions. And that's what we're trying to do with them. How do we use this data and put some kind of machine learning behind this data and make decisions which could be smarter than, just looking at financial data from the bank, because many of these people don't run all their transactions through the bank. There's still a lot of transactions that happen through cash. But again, a lot more activities happen on the mobile network than the banks. And so we feel this is going to augment what we have, what we're getting from the banks. And that is what we're actually developing.
Okay, thank you.
Yeah.
Okay.
Yeah. So I have a few questions, right? Number one was with regards to what non-financial services data are you using as part of your credit model? And the second one is with regard, do you want to take each after? Do you want me to wait for you to respond, or you can take all of them at?
Okay, so without going to specific, because we don't, again.
Is that your proprietary?
Yeah, some our credit score, we don't break down the details of our algorithm, but then there are some of the data that we get from mobile devices of our customer that we use for scoring, some mobile device data that give us some insight on what the customer does, and then, pardon?
You don't have to go further. I understand.
All right.
The second one was with regards to your projections for your user growth, the user base. You are currently at around 200K, and you are projecting 1 million users by the end of this year. What's the logic behind it? What intervention are you putting in place for a 5x user growth?
Okay, this projection is based on certain partnership that we're working on that I did mention that is expected to actually do some kind of major push on our customer acquisition strategy. So we're working on some kind of GTM partners that should scale up everything for us, and this is what leads to that kind of projection. And also, there are new products we are launching this year. As I did mention, we are launching insurance just next month. That is going to also put some boost on what we're doing.
How many of your current customers demand insurance products? Because I see your projection is 10 million in terms of total mobilization of insurance premiums. Are these mandatory insurance products within the regulations of Nigeria, for example, motor insurance or stuff like that? Or what kind of insurance products are you selling?
All right. So the insurance projection here is based on the partnerships that we have signed with existing insurance company and what the license we have got is going to allow us to do. The license we've got allows us to partner with all the insurance companies, as many as we can, if we want, and allow us to actually offer any type of insurance product. But then we are selective on the kind of product we want to offer. We want to offer motor, we want to offer health, we want to offer housing insurance, we want to offer gadget insurance. So these are popular type of insurance that people buy. And we see that we can play at the retail level that should give us those kind of numbers based on also some of the partnerships that we are working on.
Okay. Based on your disbursement rates, right? Are you comfortable to share what your defaulters rates or NPLs look like?
Well, NPLs, as such now, NPLs for us, so we have our NPLs broken into two different brackets, right? So we try to monitor NPLs in two different brackets. We monitor at the SME level, and then we monitor at the nano retail level, because there is a huge disparity in terms of, the rates that are charged on these two types of customers. Okay, so at the nano or the individual level, the nano micro level, we are maintaining about 10%, and the rates that support that also is there. And then at the SME level, we are maintaining about 3%.
What portion does your retail form of your lending book?
What portion?
In terms of ratio between your SME lending book and your retail lending book, which one is bigger today?
Is it in terms of the volume of transaction or the number of
volume
customers?
and value? Volume and value.
Okay. Okay. The volume in in terms of volume, in terms of value, sorry, the SME has a higher value, but in terms of volume, the retail
does. Because I think 10%. Yeah. What measures do you put in place to safeguard your collections?
A number of measures. So
a total, is it there? Maybe let me just add a follow-up question, and then that'll be it. So is it an unsecured loan? Is there some collateral assets in it?
So at the nano level, they are totally unsecured. I'm talking of about $10, $20, $50, $100 type of loan. They are unsecured. They are mostly instant type of loans. And okay, so the major source of recovery is the fact that the customer provides some kind of tokenization using their debit card to their account that allows to continue to go check their account and recover. So we continue to recover in bits even after a year. So the recovery could be slow, but some of them you eventually get the fund, and they pay more because there are penalties, ongoing penalties for delayed payment, and that's why over time it pays off. And also, we do address verification at certain level, but not at the very entry level. At tier 1, we don't do address verification because the cost is not going to support that. So basically, when there's a default, you continue to send notifications, make calls, and also present the data at the credit bureau. And some of these customers, they are known for, always liking moving around to borrow from one lender to the other. So by the time they go to another lender and then they find out, okay, they can't borrow because their names are on the credit bureau, then they tend to come back to come and pay before they can borrow again. So we see that kind of cycle. And so we have some confidence that we're going to continue to recover the funds.
And the SME at the NPLs, oh, you said they are 3%. And the size of loans to give them is as high as $2,000, as you mentioned.
Yeah.
What measures do you put in place for recovery as well?
Yeah, for SMEs, they provide guarantors, all right, and they're also unsecured by the volume of transactions they are doing, but they provide guarantors. But there are people that we verify their addresses, they have businesses, and so we have recovery agents, recovery team that come to visit them to recover the funds, and also we do have the credit bureau system also that do impact on them for those that want to go borrow from other sources. So the major source of recovery, also SMEs, most of them also present checks, and it has also its implications where those checks are returned, because in Nigeria it's actually a criminal offense for you to issue those checks. So those checks also are presented as evidences for recovery. So all these are put together in, helping with recovery of the SMEs transactions.
Just want to see if there are questions from other panelists as well.
Yeah, I think I have just a couple of questions.
Okay, go for it.
Okay, fine. So thanks, Austin. Good job on that you're doing. I think my first question would just be like, the foundation of this loan is repayment, and what are you doing? Is there anything you're doing differently with the repayment methods, maybe cards or whatever? Like, and if you're using cards, what kind of safeguards do you have around that? Do you want to answer first, or do you want me to ask you my two questions?
Okay, let me answer first. These are some of the challenges we face in the industry, and Deji is in the industry, so he possibly knows some of these issues. So repayment, we start by ensuring that you can't take a loan on our platform without tokenizing the card, without giving us a debit card, which give us access to your bank account. All right. So that is number one. And then for some of them, for example, at the SME level, there's what is called direct debit through remitter. In Nigeria, there's remitter that give direct debit access. So the SMEs, they provide that. It has a little bit of manual process involved, and that's why at the nano level we don't implement that kind of measure for those type of loans. So when you have your card tokenized, when it comes to recovery, we tend to go to the accounts from due date to start collecting back the fund, and we are able to collect partial deduction. We're able to collect part of it from the fund that is funding the account, even if the customer doesn't have all the funds at that moment, and we continue to go back day in, day out. But then there are fraudulent customers also, as we have seen, that could go to the bank to go, delete that card or say that the card is lost, and that prevents you from having access to do such recovery. And then when that happens, then you also blacklist those customers at the credit bureau so that they can't have access to fund other places, and then we continue to call. One of the things we do is just to make sure that, okay, we continue to find how we communicate with the customer, call, send SMS, send email, but we try not to go into the level of harassment as we have seen is done by some other lenders. We try not to go into that level of contacting third party and using other data from the customer device. But then, so those are the options that we use today. We also provide option for customer to actually pay back through transfers, because we have wallets that are created for every customer, and they can actually do direct bank transfer to those wallets. All right, will that answer your question?
Yeah, that does. I think on my second question, just be like, based on your presentation, you have two primary business model. You have lending to on P2P, which you support, and then you have direct lending. Of course, you now have the insurance aggregation model coming up. In terms of the P2P loan, do you kind of provide assurance to those who are lending to other players on your platform, or everybody for themselves?
Okay, so that's a model we continue to try to fine tune because it's something that have been questioned by different people, and we try to see how we can continue to evolve this model to see how we can bring out the best of it. As P2P is more like an evolving kind of model worldwide, and in Nigeria is actually a lot more new. So we started by saying we are not going to be responsible for the lender's decision. The lender make a decision, we only score and present to lender, and then the lender decide to lend or not. Therefore, we are not taking any liability for any of those transactions that are done by the lender. But of course, there are certain lenders that are not happy with that, and some people wonder why P2Vest, is not going to take any liability at all. We actually offer insurance options for the lender to insure some of those credits through credit life, and but then there are other kind of conditions that needs to be met for credit life to be able to fulfill or return in terms of claim. And again, that's not going to be 100%. So what we try to do is to come up with a model where we are doing a hybrid now. There are some key players, some key lenders on our platform based on certain type of information they are able to provide for us and level of transactions they are doing, that we are able to guarantee their transactions based on certain kind of agreement. We're able to guarantee the transactions, and if there is default, we say, okay, we're going to recover, but then we provide some kind of cover for their transactions. But then this is not open to everybody because we know it's also subject to abuse and it could be taken in a fraudulent way. So we don't open that to everybody. Thank you.
I think Sawan had a question.
Yes, I want to interrupt. Austin, firstly, thank you for the presentation. It was really insightful. Great product, great market opportunity. I think you've done well to get to where you are. A couple of questions from my end. We didn't actually, or I did not see how you acquire the customers, both from a nano customer perspective or the individual or the SME part. So that's the first thing I would like some insight on.
Okay, thank you very much. So thank you, Sawan. How we acquire the customers? A lot of our customers are acquired through some kind of direct marketing, digital marketing. We do a lot of digital marketing. We have marketing partners, Facebook ads, Instagram, and all those channels. We also do have some type of program like these, radio programs, television programs where we talk about our products, and through all those means we get customers. And we also do a lot of referral programs. There are referral options on our platform where a customer brings another customer, and there are a number of customers who bring and get rewarded. So from time to time we run some kind of promos to encourage existing customers to bring other people. We see a lot of success actually from referrals. All right, that is one of the ways we're growing the platform. We don't do a lot of above the line type of advertising, TV and all that. We've not gone into those type of advertising. A lot is happening at the retail, low level, one-to-one engagement, direct marketing and referrals. For the SMEs, POS merchants, a lot of it is happening through GTM partnerships and also one-on-one engagements. Our sales staff go around to engage some of these merchants and get them in. And some of these merchants are also in some kind of ecosystems where we are able to engage those ecosystems and see how we could get them on our platforms. Thank you.
Okay, perfect. Thank you. And the second question is around the average cost of a loan. So both for an individual and for the SME. So what's the APR I'm paying if I'm the individual or I'm the SME?
Okay. The average cost in terms of percentage or
Percentile,
value?
percentile. So for every $2,000 I borrow, how much do I pay back?
How much do you pay back as a customer or as okay, so yeah, I get that.
Yeah, individual
in terms of
APR.
interest rate, yeah. So for a customer that borrow at the nano level, you know, $10, $20, they are paying at the average of 12 to 15% monthly on our platform, but the rates are dynamically assigned based on our credit score. There's no fixed rate, depending on how you score. If you score lower, you pay higher and all that. So those things are configured in our algorithm. While at the SME level, the customer, the SME, they pay between 3 to 5% for the loans. Yeah.
On a monthly basis.
Pardon?
On a monthly basis, correct?
On a monthly basis, yeah.
Okay.
Yeah,
understood.
so
okay.
our loans are on monthly basis. We on the average, we do 6 months actually, so we hardly have to score on an annual basis.
Okay, all right. Okay, thank you. Good luck. I think it's exciting times for you.
Thank you.
Okay. Any other question?
Yeah, two last ones from my end. Austin, thanks a lot for the presentation and all the questions. So it's been very comprehensive. But I wanted to understand in terms of the kind of partnerships that you were actually highlighting, more than the competitive space, these partnerships are something you're actually developing at the B2B level with some set dispersal targets with them, or what kind of partnerships are these?
Okay, yeah, these partnerships are more at the B2B level actually. And what we're trying to do is to see how we look at, you know, a partner that has the set of customers that we believe require the type of loans that we offer. For example, the SMEs, point of sales merchants, they have banks and also some other players that aggregates them. And when we partner with those people, they are able to help in terms of their recovery of the fund, because they do settlement for them and they can deduct these funds for us. So it's a lot more secure to partner with those people because their funds run through those systems and they can help deduct the fund. And that is why we're able to score, rate them lower in terms of rating. The interest rate, we're able to give them lower rates because these people are able to recover the fund for us, and then those loans are funneled directly to us through the partners, all right? And somehow the partners also get some kind of commission on those type of loans. But on the individual basis, you know, there are SMEs that we engage directly from our sales staff, and they just meet them in their shops and engage them. Okay, you need to, you want a loan, we can offer you, and then you sign up on the platform and they get a loan. But the partnership is what we see as a lot more option for us in terms of scaling, and then we are putting a lot of effort on that this year. We've signed up about 3 partners that we are now working on integrations that could give us a lot of these SMEs.
Got it. Okay, thanks. That helps. And with the partnerships, I do understand it's like a slightly longer cycle of the tech effort that actually goes into it, and then the whole involvement. Do you kind of get into like a partnership with someone with guaranteed dispersal volumes, or are these more like how are they balancing? Because in the competitor slide, I actually didn't see a lot of competitors who would actually scale up to the kind of USPs that you have. So are there not other competitors who are kind of offering the kind of products you have at the moment?
Or there are competitors actually, and so there is no incentive for the partner to guarantee a number of loans that is going to come anyway. There is no any such type of condition on a partnership or agreement. Okay, so these are based on the fact that there is a need. All right, the partner do know that there is a need, and the customer have the need, as we know that these SMEs from time to time they require additional funds to run their business. We focus a lot on this type of SMEs because they actually conduct banking services. All right, and so in Nigeria there are extensions of banks. They offer withdrawal services, they offer deposits, they offer account opening. So they do banking services, and from time to time, they do have need of additional cash to carry on their transactions. And most of those partners do not offer credit to them. And so we say, okay, let's come in and partner with you to help drive your volume. So for them, it's an incentive actually because they see more volume of transaction going on their platform, for which they also make some kind of commission. They charge fees for those transactions that are happening on their platform. The more transactions the merchant is able to do, the more commission the partner is going to get. And so the better for them when we offer the merchant a credit and the merchant is able to do more transactions. So there is an incentive, there's a win-win for everybody. And so we don't really have any condition there to say you must deliver a certain number.
Got it. And while you're actually investing so much time in developing these partnerships and also kind of going directly to the SMEs, and I do see a lot of our conversations with the panel itself actually lied a lot on the alternate data. Have you as a company thought about creating some of the transactions through your platform to be used as alternate data, or are you going to be relying on the third-party source data like telecom and some of the other? So in your roadmap, have you thought about building some alternative data as well as you acquire the customer?
Oh yeah, so as much data as we have access to, we continue to aggregate those data and reuse them, in subsequent decision model. And that's part of the our engagement with a company like Periculum, where we did an ML model together. So those data, we continue to find how we can make the best use of the data. And we think that over time, we will have enough data that will help in making better decisioning. But based on the kind of data we have now, we think we still need a lot more of external data. But over time, that is the strategy actually, is for us to be able to look inward with the volume of data we have and make decisions that could be more precise.
Sounds good.
Thank you.
I think this has been one of the most engaging sessions that we did so far. I was really glad to see the kind of participation from all the panelists. And Austin, I think kudos to you for answering all the questions so brilliantly. I did not feel that you were really getting roasted. The heat was not really on, I guess. The panelists were really soft on you. But hey, again, really appreciate everybody's time. Austin, go ahead, please.
Thank you. Thank you, everyone, again. I really appreciate it. Samuel, I think this is something, and appreciate our panelists. Thank you all for the time you've been here. We really appreciate your contributions. We've taken some learning, even from your questions, of course. Pankaj is saying I wasn't getting the heat. Of course, so we got some, and we're taking some learning from everything and all the conversation. We believe this is going to help us in our product development and in some of the things we're trying to do. Thank you all for the time well spent, and thank you all for all the guests online. Samuel, are you there? Can you say some thanks again to our panelists?
Samuel? I think I can't see him. He's not.
Okay. All right. Thank you all. So on behalf of Samuel and I and every member of the P2Vest family, we are very glad to have you today, and we do believe that we will have some form of engagement again in the future. Thank you, Pankaj. Thank you, the EthAum partners. We are glad for this session. Thank you very much.
Thank you, everybody. Really appreciate your time, and we'll reconnect soon. Take care, Stacey.
Great. Thank you. Take care. Bye-bye.
Thanks, everyone. Bye.
Bye.